Okay, I'm an idiot. There, I said it. So we haven't talked about cryptocurrencies yet on the channel, and I'm going to talk about them more going forward, as I think they can be a great way to invest if you can stomach the volatility, which of course is a huge part of cryptocurrency investing, especially these last couple of days where Bitcoin is tanked with about a 20% loss. I will definitely be taking a deep dive into cryptocurrencies in the future, so make sure to subscribe and hit the notification bell so you'll know when those videos are published. For those who don't know, cryptocurrency was originally thought of as digital money, where it has no intrinsic value other than what its users agree its value is. The problem with that is that cryptocurrencies like Bitcoin, Ethereum, and most other cryptocurrencies are so volatile that no one wants to actually use it as money. El Salvador aside. Crypto's best use right now is as digital gold, where you can store value in a hopefully appreciating asset. As the values of cryptocurrency stabilize in the future, they may be more suitable for use as money, but they really aren't there yet. A great example of what can happen when a highly volatile asset is used as currency is the story of Laszlo Hanyecz, or as he's better known, the Bitcoin pizza guy. On May 18th, 2010, Laszlo was hungry. Specifically, he was in the mood for pizza. He posted on the Bitcoin forum that he would pay anyone 10,000 Bitcoin to deliver 2 pizzas to him. He said he wanted large pizzas because he liked having some extra to nibble on later. He also mentioned that he likes onions, peppers, sausage, mushrooms, tomatoes, and pepperoni, but no weird fish topping. I say no weird fish topping is always a good call. A little later on the forum, Laszlo just said that he thought it would be interesting to say that he paid for pizza with Bitcoin. At the time, 10,000 Bitcoin was worth about $41. 3 days later, Laszlo posted that no one had brought him pizza, and he wondered if 10,000 Bitcoin was too low. On May 22nd, 2010, Laszlo reported that someone had in fact delivered to him his 2 Papa John's pizzas, and he paid the agreed upon price of 10,000 Bitcoin. That was the first physical purchase made with Bitcoin in history. As of today, 11 years later, Bitcoin is sitting at right about $46,000 per coin. That means that those 2 pizzas cost poor Laszlo about $460 million, or let's call it $500 million. That's what, 230 million per pizza. That's why it's a bad idea to use something as volatile as most cryptocurrency as, well, currency. Fast forward to the end of 2017. Cryptocurrencies are really taking off. I start buying Bitcoin at about $10,000 per coin. I buy it in chunks and eventually amass 2.35 Bitcoin. Over the next few years, it goes as high as about 16,000 and as low as about 3,500. The pandemic hits in March 2020, and Bitcoin basically flatlines at about 10,000. October rolls around and I start thinking, I needed some extra cash in case the pandemic were to drag on. So I sold my Bitcoin at $10,609 per coin and put $24,963 cash in my pocket. Great, I didn't lose any money. I also cashed out of my positions in Ethereum and Litecoin. I sold it all. That money soon went to pay bills, taxes, office overhead, that kind of stuff. Lived on it. Then, as is my way, within weeks of me closing out my positions, Bitcoin took off, skyrocketing to $65,000 per coin within 6 months. So that Bitcoin nest egg would have been worth, at its peak, about $152,000. That means I missed out on about $125,000 of appreciation in 6 months. Let that sink in. The way I looked at it, I basically gave away about $150,000. Yeah, okay, I was an idiot. Fortunately, the story doesn't end there. A friend of mine, actually the same friend that got me into crypto in the first place back in 2017, had been texting me after my post-October financial stupidity and convinced me to get back into crypto. I knew he was right. I regretted cashing out as soon as I did it, so I started accumulating in February of this year. I'm happy to report that after scraping together every cent I could get my hands on, I replaced most of the Bitcoin I sold and also added back positions in Ethereum, Cardano, and a few other altcoins. No Doge. No Doge. And you can bet I had to buy back in at a lot higher than $10,000 per coin. But I'm definitely back on the plus side. So, what have we learned? This brings me to the subject of this video. 5 lessons I learned from investing in cryptocurrency. First, and this doesn't count as one of the 5, the pandemic has made people lose their freaking minds, me included. Past that, let's look at the lessons we can learn from investing in cryptocurrencies. 1. Don't be emotional about crypto investing. This means you have to be as dispassionate as possible about your crypto portfolio. An asset as volatile as cryptocurrency means you're going to have incredible highs and soul-crushing lows, sometimes in the same day, as we saw a couple of days ago on September 7th. 2021. That's just the nature of the beast. Being emotional about your crypto portfolio will only lead you to falsely believing you can retire in a couple of years when your crazy altcoin flavor of the month 100x's, or that you'll lose everything when your crypto's value plummets 90%. The emotional roller coaster is no way to live. And you'll find that your mental health is greatly improved when how you feel isn't tied to that number on the Coinbase app. 2. Never invest more than you're willing to lose. Sure, Bitcoin has been around for about 12 years, and it's the fastest growing asset class in human history. But it can go away tomorrow through what's called a black swan event, like being banned by every major country in the world, or some quantum computer deciphering the security protocols that cryptocurrency is based on. If one of these things happen, your crypto investment becomes virtually worthless overnight. If you were relying on that money to be used at some point to pay rent, for example, then you're out of luck. In my mind, I think of it as whenever I buy crypto, I have essentially lit that money on fire in the driveway. It's gone. It doesn't exist. That way, if it does go to zero, you can still live as if it never happened. Like Jay-Z said, if you can't buy it twice, you can't afford it. 3. Understand what you're investing in. Warren Buffett said, risk comes from not knowing what you're doing. Before you put any money into anything, you have to know what it is, how it works, why it exists, and what to expect from it in the future. If you don't know what cryptocurrency is, how it works, or why it even exists, or what is expected of it in the future, then don't invest your hard-earned money until you do know these things. Otherwise, it's a total crapshoot. You might as well go put your money in a slot machine in Vegas. Don't take my word for it or anyone else's. Proviso, caveat, not financial advice. Do your own diligence by doing your own research, coming to your own conclusions, and acting accordingly. There are literally hundreds, maybe thousands of cryptocurrencies, most of which have no reason at all to exist. They don't solve any problems, and they will only ruin you. Only invest in the ones that make sense to you, and don't go near the ones that don't. I'll do videos about the blockchain, decentralized ledgers, smart contracts, and the other important aspects of cryptocurrency. But in the meantime, there are videos here on YouTube that can break it all down for you. Next, have a plan. Are you investing for the long term or to make a quick buck? In my opinion, day trading cryptocurrency is blind luck, and it will wreck you eventually. It's straight up gambling. Sure, you might get lucky once or twice, but more often than not, you won't. You can't pick the tops or the bottoms, so don't try. My plan is to buy and hold. Your plan may be the same, or to take profits along the way and be more actively involved than I am. That's fine, but be deliberate in what you do and follow your plan. Lastly, be patient. I'm of the opinion that cryptocurrency is world-changing, or at least the technology that cryptocurrency is based on is world-changing. But right now, we are very early. The benefits of that technology are just starting to become apparent. The moment-to-moment fluctuations of price will only drive you crazy, and it won't matter in 5 or 10 years. Don't obsessively check prices. Don't worry about a 10 or 40% change up or down in price. It just won't matter in a few years. You want to have what's called diamond hands, which means you don't panic and sell at the first sign of retracement. Anyone who does sell has paper hands, and that's usually the investors who are new to cryptocurrency and aren't really up to the challenge of riding out these wild swings in value. Don't be that guy. Be patient. If you can stay unemotional about your crypto investments, never invest more than you can lose. You've done your research and picked the cryptocurrencies that have a reason to exist and will solve specific problems. If you have an investment plan and you're willing to be patient enough to outlast the day-to-day volatility of the market, well, then you're better prepared than I was. And you're ready to make intelligent and informed decisions about cryptocurrency investments. Good luck, and I hope to see you on the moon. Like I mentioned, I will be deep diving into crypto as well as other investments as we go, so make sure to like and subscribe, and also leave a comment below telling me what you've learned about crypto investing or what you want to learn about crypto investing. Thanks.